All right, hello everybody. This is Anthony with Trader's Ultimate Edge. Let's look at today. We finally had this push up here today. This is what we've kind of been waiting for after that fall yesterday. Was this push up back up? Now I told my clients yesterday, everybody's watching this, that we were really down in this value zone. This zone here, where previously last time it had fallen February 24th, I think, down into this area, we just had a melt up out of it. So that's kind of what we had today. It was like a really slow melt up. We ended up plus 2.6 on the day, which of course includes the gap. So it was a nice move up. So here's what we've got to be watching for tomorrow. All right. Tomorrow morning, 6:30 a.m. my time. It's an hour before the market opens. 8:30 a.m. Eastern. The CPI report comes out. CPI report, of course, Consumer Price Index, it's going to talk about inflation. We are expecting a 0.5 increase month over month, bringing us to 8% year over year, which, of course, is terrible, but that's what we're expecting. Now, we're speculating, is a little bit of a miss already built into the market. And if you see how low we are, we traded lower over here. This was on March 8th. We traded a little lower. Oops, share my screen there for the guys in the room. All right. March 8th, we traded lower. And then on March 7th was that big, huge risk-off day. This was the day I think was probably retail dumping all their portfolios finally. It was just really a lot of capitulation selling. So I think a lot of this kind of had to do with inflation concerns, that sort of thing. So the question is now, how much is built into the market? Let me zoom all the way out here. Sorry, my screen's a total and complete mess. I know where everything goes, but you may not. All right. So, right here at just under 4,300, I do really think 43 to 40... around 43 is probably our fair market value at the moment. So I think it's valued just about right. Let's see. Here's where we are. We're coming right to the lows in January. That's one reason why we're kind of sitting here as well. These are the lows right from January, just above this 4260 area. This is the area that we've been watching as kind of a dividing line between bullish and bearish for us. Now that's what we've got. We can also see here the ES has put in a higher low double bottom right here. And let me actually switch to a clean chart to see this easier, because this is really cool. Great. Okay, now we can see it easier. This is a fairly clean chart. All right. So right here we can see that the ES has put in a higher low double bottom right there. We had, you can find a few patterns in here. This was like an inverted head and shoulders, kind of pushed up, then it sold back off on Ukraine, Russia, inflation, etc., and then came down here, and then we had this push up here today. Now, the last time we had a push up like this, look over here. See this? Came up out of the bottom, February 24th, came and pushed up. What happened the next day? Another push up. And why this happens is really important. The reason that happens is because you get retail coming in, and retail, let me open this up. Oh, all hours. Okay, it's on here. Retail gets FOMO. They get a lot of FOMO. So what happened over here the day it all sold off? This was retail dumping their retirement accounts because they thought, oh God, more is happening. This isn't going well. We're all going to die, or it's going to be World War III or whatever. So it was retail dumping their retirement accounts. That's why that fell right there. So now what happens is we bottomed out Big Money saw that we bottomed out. Big Money saw this. They aren't dumb. They saw that was retail dumping their stuff. And I know it's retail because you could see which sectors were getting bought and sold. It was clearly retail. So then they came in here, and then this was yesterday. Yesterday was, you can see here on the chart, just kind of a chop fest with that weird news issue we had yesterday, where some news got reported that wasn't actually news, etc. Anyway, let's just ignore that. This probably would have just been kind of a straight across sort of a day. It's kind of a consolidation day. And then we pop back up here, okay? We're so low here. Last time we were this low, we got this big push back up. In fact, that's right where the day started, was right around where we started, or where we ended yesterday. And you get the push up. See, that's not a coincidence. That's because this area is a buying area for Big Money. They want to buy down here. They like it. It's cheap. This whole area, Big Money is willing to step in. And now we know that anything below 41.60 or so, anywhere below that, we know Big Money is going to step in. So now we've seen it twice. Now, we can look what happened last time. Chopped sideways overnight and then shot up. This happened because retail got home, realized the mistake they had made here and here by dumping their portfolios. They realized that mistake and they FOMO'd back in. Okay? Then what happens again? We go sideways, sideways, sideways. Oh God, more news. It doesn't look good. Retail dumps again. Okay? Now what's going to happen? Big Money bought. What's going to happen tomorrow? If history is correct, we get another push up. Now, here's what's stopping that. Potentially a wrench in the works for tomorrow is that CPI report, okay? That comes out at 0630. I believe we already have a built-in kind of bullish sentiment, a bullish move built in because of that. And I think retail will probably put those orders in tonight. They'll be market on open orders. Now, what's going to happen is that CPI report comes out half an hour prior to market open, and if it's bad, if it comes in at forecast, I think we're totally fine. I think the market does what it's going to do. I think it's going to push up probably as high as this level, probably as high as 4,400 tomorrow. That's just kind of my thoughts. I think we come back to this area. You can see got some resistance right there. We can come back up to this area and kind of test it. That's what I think we're going to see, and hopefully we can get above this trend line. This is a big trend line all the way back from all-time highs, and it just comes all the way down here. Now, if the CPI report is really bad, the question is how much is already built into the markets? Personally, I think, maybe a little bit could be built in. And the reason I say that is this CPI report, the CPI reports always run a month behind, so this is for February. And in February 24th was where we had our low. Everybody already knew about oil. Okay, let's go back on oil. February 24th, 5th, 8th. Okay, we already right here knew about Ukraine. Okay? That's where it topped out at $100 that day. You guys remember that? This is the day of the invasion. Okay? And it topped out at like $100. So we already knew that this Ukraine thing was happening. Now, the question is, will these price increases, how much will they affect CPI? Because remember, this is not going to be in this CPI report. This big monstrosity of oil prices right here is going to be in the next one. So the one that we're going to see coming out now, how much did this affect it? I think maybe a small miss might be priced into the market, especially given how low we are overall, and we're so close to where Big Money's picking it up. And here's the thing. I believe Big Money bought this up overnight. I believe Big Money bought right here. Big Money knows. They know about oil prices. They know about potential inflation. A lot of what happens does not surprise Big Money. They pay millions of dollars a year to analysts who are way smarter than me, way smarter. And they got a lot of them. And they got computers. They got all sorts of stuff. Hell, they probably have witchcraft. I've got no clue. But they know what's going to happen before we even think about it. And big money still bought. So that's why I'm thinking the inflation number is probably going to come in at forecast, maybe a little over, but I think it's built in, and that's why. And if that's the case, I do believe we get our push up off of retail FOMO tomorrow. I think is what we're going to see, at least up over this trend line. And that's good. We need to get over this trend line and push ourselves back up. So that's my thoughts. If CPI comes in really terrible, it could push us back down here. It's like 41.60s. It could push us back down there. I think that's an outside chance, though, especially with Zelensky now saying multiple times that he is willing to come to some sort of compromise with Russia and try to end this thing. Russia's already, they talk a tough line, but they've already lowered their demands, and now the demands are getting much more closer to where Zelensky's at. So, close that. So, it's seeming like some sort of truce or ceasefire is getting closer. It's getting closer. And big money sees that too. And we gotta follow big money. Always follow big money. Try to figure out what they're doing, because they are usually right and the rest of us are usually wrong. There's a reason they call us dumb money. So follow the big guys. Okay, that's all I got. Thank you, everybody. You take care. Have a nice evening.